Well, good afternoon, everyone. I hope you're having a fabulous day. We're going to get started here in right about a minute or so, just allow a couple folks to trickle in. In the meantime, I'm going to pop something into the chat here. If you have not signed into the platform before, you could use that link right there, back9signup.com. If you have an existing Back9 and Quote and Apply website and you're not sure who your marketing manager is, just indicate so by typing in the chat marketing manager, and we will make sure to connect you. As well as if you're new and you're signing in, please make sure to indicate which group referred to, such as Smart Choice. I know we have a lot of you folks in here today. Let some folks in, and there we go. Okay, well, without further ado, let's kick this thing off right on time. Well, I hope everyone is well. Again, thank you for joining. My name is Adam Levine, and I am your brokerage director here at Back9. And today we have a very special webinar. Today is on commercial life insurance and the uses for business owners. You know, probably a good portion of you are PNC agents or financial advisors, and how many times have you come across a business owner and you've helped them in one fashion or another? They're getting, their GL, their commercial auto, their BOP policies. And if you're not selling life insurance, you're not talking about their life insurance planning, you're really leaving a lot on the table there. And so today's webinar will leave you with some tools, some concepts, and really some direct action plans to get out there and help these folks out. And, obviously it'll help you increase your business and your retention. And heck, we get to make a little bit of money as well. So real quick, little housekeeping. If you have any questions, please do drop those in the chat or the Q&A box. And, if we don't answer it here today, I'll be certain to follow up with you as soon as possible. Okay, so first, what I'm going to do here is just share our Quote and Apply website. And so again, if you're new and you don't have this yet, what this is, we give all of our agents their own selling website that'll be white labeled, meaning you will put your logo, your information in here, and you'll be able to access multiple carriers and sell right online. And so here we'll just do a quick demo. Okay, we're going to collect a little bit of info. And this is your digital insurance market. And from here, you can, IULs, long-term care, you name it. Okay, we have about 20 carriers available through the Quote and Apply website, but a total of 80 in the background. And we'll actually be discussing this, but you can use this for 2 out of the 3 we'll talk about today, where you can apply right online and do this for a business owner, for a buy-sell agreement, or for a key man policy. We just changed the ownership here, switch that to business, and then bingo, put in the appropriate information. Okay, so we'll be coming back to that if necessary. So with me today is a very good friend of mine, Mr. Paul Sargent here with Principal, probably one of the most foremost experts on business life insurance and really one of our favorite carriers when it comes to the commercial side of things, and most recently back into the consumer market. So Paul, thanks for joining, man. Really appreciate you stepping in here today.
Adam, appreciate the opportunity to chat this morning.
Absolutely. Well, maybe if you would just take 2 quick seconds, tell us a little bit about Principal, and we'll jump right into this thing.
Yeah, and as Adam mentioned, Principal really is known as a business insurance, life insurance carrier in the marketplace. And what we're going to talk about today are really a handful of timely approaches for everyone on the call to engage business owners. And we're not going to bore everyone with all the product details. We're going to talk about targeting the right kind of clients. Who should we be talking to? What are some of the key phrases and language that open doors to business owners in the first quarter of 2026? And then what are some core planning opportunities that often are overlooked, but also are very timely given the fact that we're coming up on tax season here in 2026 as well. So our goal here today is really share some of those ideas and highlight some of the tools and resources that you have access to by working with Adam and his team at Back Nine, and certainly working with us here at Principal as well.
Awesome. Thank you. Thank you. And I'll apologize in advance if I happen to lose a little Wi-Fi. I'm here in Texas at a Smart Choice meeting, and kind of like my strange sister, the Wi-Fi is a little unstable. So bear with me, folks. Well, great. Again, Paul, welcome. So let's kick it off. Tell us a little bit about commercial life insurance and how we can help some of our agents and advisors here really add value to their practice.
Yeah, I appreciate that, Adam. So I'll dive right in and really, as we think about the opportunity and working in the business insurance market, everyone here in the call, we're talking about risk planning for business owners and looking at how we enhance the offering that you provide as a part of your organization. So these are additional talking points, conceptual ideas that we've found successfully used amongst property and casualty agents, financial planners and advisors, benefit producers, and really anyone who's interfacing with business owners. And the first question that always gets asked to me is, who's a really good fit to talk through about all these different planning opportunities? One of the unique things that we do here at Principal is we are known as that business insurance carrier, and we are actually the record keeper on over 25,000 business insurance plans. What that allows us to do, it allows us to look at our book of business and identify consistencies around business demographics, industries, corporate tax structure, number of employees, to really help you target within your own book of business who are good fits for the key person plans we'll discuss, who are good fits to talk about buy sell strategies that we'll also highlight a few ideas on here in a few moments as well. So as a part of our follow-up to the presentation today, we do have a singular piece that is our client profile sheet. It's a great way for you to look at who in your book of business matches the individual businesses that have purchased these types of strategies with Principal in the past. A couple of core areas where we find opportunity both in the key person planning and buy sell planning structures that we'll talk about here in a little bit. A lot of the white collar professional organizations that you're probably already working in as well. Think about your law firms and your CPA firms. Think about medical and dental practices. If you're doing any of their liability coverages, their malpractice insurance, those are really good fits for a lot of these types of planning opportunities we'll discuss. Architecture, engineering firms, but also we do see a lot of non-white collar businesses as well, manufacturing and specifically construction and contracting related businesses. I'll touch a little bit later on as to why those are really good fits and kind of what are some of the avenues to open those doors and key talking points. But if we think about your own block of business, be thinking about those entities, thinking about architecture, engineering, construction, manufacturing, and a few of those other white collar professions that might be in your book of business, because those will be the core markets that you certainly want to talk to with these particular opportunities we'll discuss here momentarily. So in addition to having all of those business owners as clients at Principal, one of the other things we do is we survey business owners that are non-clients. So we also look every year and we survey business owners across the country on a wide range of topics, and they tell us their priorities. And since 2010, the number one concern we have heard every single year from business owners is business protection concerns, predominantly about what happens to my business, particularly the loss of a key employee. When we think about over the years, unemployment rates have gone up, they've gone down, they've been all-time lows. All those things are relevant for all employees, but when we think about the key decision makers, the key drivers of revenue in a business, they are the ones that are typically the most concerning if a business owner would lose one of those individuals. If Adam is my top sales guy and I lose him and I lose 10, 20, 30, 40% of my revenue, that's a huge concern for me as a business owner. So a lot of business owners have these concerns, and that's been consistent for the past 15 years. Only a little over half have actually done something about that. And I want to talk about really two different avenues to approach business owners. We'll also talk about, the business succession planning here, which is down at number 4. But really, what I want to hone in on first and foremost is that protection strategy because it is top of mind with business owners. Now, I'm going to go very high level and very basic to start. Adam mentioned earlier around quote and apply and looking at how to leverage that tool to quote life insurance as a part of a buy, sell, or key person plan. The number one concept that we sell at Principal is key person insurance. Very basic. If my key employee died tomorrow and I lose that revenue, those client relationships, maybe they have some equity in addition to them being an employee. Maybe they're my administrative assistant who just knows where all the bodies are buried. Those are valuable people to an organization. So what we want to do is we want to put a very basic life insurance policy on that key employee. So if something does happen, we can utilize those insurance proceeds to offset revenue generation that has been lost, to cost of replacement, because maybe you have to hire two people to replace that one individual, or simply just to make up for the fact that we lose some equity or we lose a person who is vital to that business. This is a common core planning technique that most business owners should be thinking about as they look at those key individuals within their organization. Now, it's very simple and straightforward as far as how this gets structured. It's corporate insurance. A lot of times we're talking about very basic term insurance. The question we often get is, how do we determine what a key employee is worth? One of the tools that you have access to working with Adam and the Back Nine team is we at Principal actually have an online key person calculator. What this allows you to do is input some very basic information about the employee, also about the business, simple things like how many employees are in the company, and then how hard would it be to replace that individual. If it's, hey, it's a business insurance consultant at Principal, and they're probably a dime a dozen. But if it's someone who is very specialized, who has maybe specific licensure, who knows the customer base, maybe they're more difficult to replace. We want to factor that into the calculation. And what this allows you to do is to show a individual business owner that based on the information around this key employee and their business, here is the potential loss of revenue that's going to cost the business. And here's what that life insurance solution would do to offset that. So it shows them the value of that key employee and how much key person insurance they should buy. Again, very simple, easy digital tool with only a handful of inputs that you have access to utilize and puts a nice presentation together for your customers. But
Paul, a lot of the agencies here too are, I think we all get lost in it and just thinking about other people, but we don't stop to think about ourselves, right? A lot of you on here right now are business owners and you own your own agency. Yeah, what happens if you go down, right? What happens to your company? What's your succession plan? So don't just think of this for outside. Think about this internally as well.
yeah, and we oftentimes don't think about owners outside of, maybe we'll talk about the buy sell component here in a little bit, but you think about owners and the loss of revenue for losing an owner as a employee in the business. I mean, oftentimes owners are not sitting back passively and watching those checks come in. So you as advisors and agents that are responsible for new revenue and new compensation, it's important to look at this again for your practice as well. Now, in reality, when we talk about, I'm a life insurance guy at heart, I've been doing this for 20 years. I obviously understand the importance of life insurance as this key person need. Now, if I go in and say, hey, Adam's your key employee, and what happens if he gets hit by a bus tomorrow or falls out of a hot air balloon or whichever way we want to, end Adam's time on Earth, in reality, most business owners don't think that's a realistic conclusion, right? What is more realistic is what happens when there's a competitor down the street who comes in and poaches Adam because they know he's really good at what he does. So along the lines of business protection and key person planning, it's also about how do we recruit, reward, and retain our top talent as well. So what I want to do is I want to pivot this discussion of thinking purely about what if a key employee dies to what can business owners be doing to help incentivize those key employees to stay within an organization. And I'll talk about a handful of concepts here momentarily, but what I want to start with is talking about executive benefit planning, key person planning, non-qualified planning, whichever way you want to describe it. What we're talking about is creating specific benefits for a select individual employee or a small group of employees. And really what I want to start this conversation with is I get the benefit of talking with financial advisors day in and day out, hearing how they approach the business owner marketplace. So these are a few approach pieces and language blurbs that I've heard from successful advisors over the years that have really stuck with me as very effective. So when we think about that key person strategy, when you're doing that annual review with your business owner clients, ask the simple question of who is the last person you want to have walk in tomorrow and hand you a resignation letter. If they come back and say, gosh, Adam is the most vital person in my business. Without him, our revenues would be gone. He keeps the wheels on the bus, all those things. What are you as a business owner doing specifically for him above and beyond what you're doing for your other employees? So we're talking about creating a specific executive benefit plan. Help them understand, those business owners, they're not alone. That the number one concern that we hear from our business owner clients at our firm is protecting against the loss of a key employee or key talent. Let them know that we have solutions that can help them address those concerns. We oftentimes will also find out that business owners, their way of retaining key employees is to give them stock or equity in the company. Now, a lot of times that can certainly make a ton of sense, but there are certain times where maybe they do that because they feel there's no other option. Whenever we're giving away equity, we're giving away a portion of control of our business. So when we talk about these plans, we help provide solutions to business owners that help their employees think like owners, act like owners, but allow you to keep control of your business. So all we're talking about here is key employee benefit planning. And the last one we heard from a actual construction company CFO, where he talked about we provide asymmetrical benefits for asymmetrical contributors in our business. The bottom line is most business owners do not know that they can create specific plans for specific employees. What they think they can do is we have a 401k, we have group benefits, everybody has to get the same deal. I cannot discriminate within those plans. So they don't realize that there are things called non-qualified plans that allow them to be selective in who they choose or in those plans. And alternatively, what oftentimes business owners are doing is they're simply giving cash bonuses as a way to incentivize those key employees to stick around. What we talk about is how do we maybe create some more golden handcuffs or really create some retention mechanisms around those bonuses to incentivize those key employees to stay long term versus just wait till my bonus is due at the end of January and then take my money and run to the new location. So all we're talking about here is really creating key employee retention plans for those business owners. Now, I'm going to jump ahead real quick because these are all the things that we do from a plan design, the different types of non-qualified plans that exist. If anyone's got 6 or 7 hours, I'm happy to jump on a call and go through every one of these in great detail. But what I really want to make sure that we talk about today is how do you help them, again, that business owner going back here to looking at the right questions to open the door, but then how do you figure out maybe where their priorities lie? And so when we talk about approaching business owners in this quote unquote non-qualified space, this key employee benefit space, no one here needs to be the expert, but I want you to feel comfortable asking these 3 questions. Number 1, what is the corporate tax structure of the business? Depending if they're an S Corp or C Corp or an LLC taxed as a partnership, it will help us determine what plans may or may not make sense for their individual business type. The second question is, who is the plan really for? Oftentimes, we start off looking at a key employee, or maybe even start off with the owner saying, I want to do something for myself. But then we find out, hey, you know what? Actually, it might be a combination of employees and people who have ownership in the business. We may have different plan designs depending on who's actually eligible to be in these particular plans. So we want to know who's the plan really for. And the last one, when we talk about these key employee benefit plans, every one of these plan designs is going to give the employer some level of a tax deduction because they're going to pay compensation to the employee. The question is, what's more important to that business owner? Is it having control of the plan, meaning I don't want my key employee just to get this bonus at the end of the year and then leave and go somewhere else? Or is it I'm really concerned about reducing my current taxable income, so I want the deduction today? So very high level, Basically, it's telling us, do we want to have the employee have control and get my current tax deduction? Or do I want to make sure I'm retaining this key employee long term and I'm willing to get my tax deduction in the future in order to have more control in the plan? So I'm going to pause real quick at Adam, see what questions have come in the chat or any other questions you may have.
No questions yet, but folks, please do not hesitate to drop something in there. I know the taxation of life insurance sometimes isn't, on the foremost mind of everybody, but, got to remember too, you're taxed on the front end. It's not always going to be tax free on the other side of things. So there's certainly the benefit to that.
Yeah, and this is where I'll kind of throw our plug in here as well. Obviously, I'm trying to get everyone on the call comfortable with who do you talk to, what do you say, and are a few questions. My goal here is not to make everyone experts on all these different plan design options. One of the things that you have access to by working with Adam and his team at Back Nine is also our planning team as well. So I do a lot of point of sale work with advisors, with agents across the country, where they go to Adam and say, hey, I've got this opportunity. Can you bring Paul in to have a discussion? We'll do everything from the discovery process with you. We'll go through and talk about the right solutions. We'll present those to the right decision makers at the business. And I'm not, revenue sharing on those opportunities. We're looking at utilizing principal solutions to fill that void. But obviously, our team is here to support you, so you do not need to be the expert. So we are here every step of the way, from the education on the front end to the discovery with the business owner to working them through the process, implementation. And then what also sets Principal apart in this is we are our own administrators. So I mentioned earlier those 25,000 plans. We administer all of these plans in-house here at Principal, and 99% of them are on a no fee basis. So we only have one specific solution that we charge a small record keeping fee. Everything else we record keep at no cost. So we try and make this a very turnkey solution for your clients and ultimately for your practice as well.
So, we did get a couple questions in here, Paul, so we can handle these. So one was, can it be deducted through payroll as a benefit? And I know we kind of just touched on that a little bit, but any light you can shed on that?
Yeah, so anytime we're talking about payroll deductions, so all these plans are compensation to the employee, whether it's today or in the future. So all the bonuses are paid out via payroll. The timing of the deduction is what matters. So if we look at this slide here, on the left side, you'll see that bonus. So this is what we call an executive bonus plan. You may Google it and you'll see section 162 if you're into IRS code. But these are plans where basically I'm going to give Adam a bonus today, but rather than deposit it into his checking account, I put into a cash value life insurance policy that Adam owns. He names his own beneficiary. It's his policy. The policy grows tax deferred like either life insurance policy would, but he owns it. The benefit to me, the owner, is that I get a current deduction because Adam is receiving that compensation today. He's got to pay tax on that bonus today. The trade-off is that Adam now owns it. So if he decides to leave, he takes that asset with him, and I lose my ability to retain my key employee. I'm not losing the deduction, but I now lose a little bit of control. So there is a current deduction. On the flip side, if I'm more concerned about Adam leaving, we would tend to move further over the deferred compensation, where I'm going to promise to pay him a benefit down the road. He has to meet certain obligations to get that bonus. And by doing so, he'll get the bonus later, which means I get my tax deduction later, but protects me, the business owner.
Also known as golden handcuffs, right?
Correct. Correct.
Actually, Sal has a great question there. So, are there and is there an IUL whole life retirement set up for key employees if they live to retirement?
And you broke
I know
broke up a little. You broke up a little bit there, Adam. Could you repeat the question?
Sorry. Sal was asking about accelerated benefits and living benefits on IUL and whole life, and if a key employee can retain those if they end up leaving. And I think we just kind of touched on that a little bit, but yeah, certainly need detail.
Yeah, so certainly. I mean, as we look at, I'll speak specifically to our principal product portfolio. We are a chronic illness rider carrier. So thinking about those living benefits, we certainly have access to utilizing those chronic illness benefits as a form of living benefits. If you're looking at other carriers that may have more of a hybrid LTC or something along those lines, It's dependent upon who owns the asset. So if we're doing that bonus program where the employee owns it and they have the control, then obviously they get to do with that policy and utilize the features and benefits as they see fit. If we're under more of the corporate control, there are a little bit different rules and taxation that goes with utilizing those particular benefits. A lot of times that's all worked out with some sort of plan document that would allow them to have access to those particular benefits. So certainly something we can consult with on a case by case basis. But as long as the product has those features and eligibility, we absolutely have the ability to do that as well.
Awesome. Great answer. Well, perfect. We'll keep that in mind. And Marion, to answer your question, it's more about data collection. And in business, we call it a census. And so certainly the more details you can gather, we even have a sample census in Boss for you. That will help us determine what's available to the client. That's part of that discovery part of the conversation as well. So yeah, you'll need a little bit of information, but you don't need a ton.
Yeah, and certainly we have, along with Back Nine, we have additional fact finders and information gathering sources that are geared towards different conceptual topics. But ultimately going back to those, three questions right here, once we've identified, this is really the starting point of what initiates those discussions. And from there, we determine, what is likely the most common path of plan design, and then we'll talk about best practices for contribution amounts and things like that. So it's a process. We aren't going in day one and saying, here's the biggest life insurance policy you should buy for your key employees. We want to be mindful of what makes sense at the individual business level. So I want to pivot our discussion to and why timing here is really good. So when we think about a lot of business planning opportunities, we're thinking about risk management, as we've been discussing around key person planning. Well, we also want to think about it, and Adam alluded to it earlier, it's that buy sell planning. And we're not going to spend a bunch of time today talking about, all the different structures of buy sell agreements and how one should be structured versus the other. But I want to talk about why now is a really good time to talk about buy sell planning, business continuation planning with business owners. We're a couple of days into March already, which is hard to believe, into 2026. Business owners right now, if they haven't already filed their returns, they're working on that for 2026 or for 2025's fiscal year. They're reconciling all their financials from last year. They're working with their accountant, their CPA to file their 2025 returns. So when we talk about looking at opportunities to engage them, this information is readily available to us because they're already working with their CPA. And I'll talk about how we will plan to utilize that tax information here momentarily. But it's also the season of reviews. I know many of you, whether you're in the benefits space, the property and casualty space, you've got the season of doing reviews, whether you're updating lines of coverage, whether you're doing benefits, whether you're doing just investment portfolio reviews. Now is the time for review. One of the key things that we want to talk about is, what is the business owner doing to review their business continuation plan, their buy-sell agreement, as a part of that annual review. And the last thing I'll kind of touch on here and why it might be, a key discussion point is, I'm sure everyone was locked in on Conley versus the United States in July of 2024, which was a landmark Supreme Court decision pertaining to buy-sells. I'm kidding, probably no one was familiar with that. But it is a very important part of we're doing planning around buy-sell agreements, that this Supreme Court decision does loom large over some of the key design structures of buy-sell agreements and may impact some of your business owner clients. I'll touch on that very high level here in just a moment. But as we go into the planning opportunities and how do we engage business owners, it is very common for your clients to have wills, maybe they have trusts, but oftentimes we're finding that most business owners, if they've got a buy-sell agreement, they haven't looked at it in a really long time, or they may not have anything at all. They may have handshake agreements. Ultimately, they may have some level of planning. Well, I know you didn't probably expect to see Mike Tyson on our call today, but I always think he has a great quote that talks about everyone has a plan until they get punched in the face. The same can really be said for buy-sell planning. And really what it comes down to is a buy-sell agreement helps a business owner and their partners determine what happens to the shares of their business upon death, disability, divorce, dissolution of the business, retirement, and a wide range of other things. It is basically the living will of a business when it talks about how do we determine what happens to the equity of the business upon one of those triggering events. It is fairly common for business owners to have some level of an operating agreement, maybe a buy-sell agreement, but it's also very common for them to have nothing whatsoever. And so the important thing is that we can help educate them on why it's important to have an existing buy-sell agreement that is current, that is well drafted, and has accurate valuation. So how do we open the door? And I'll talk about some of the services that we provide to help address some of these concerns. So I touched upon it very briefly. I'm not going to go into detail around the Conley versus United States because that's probably a longer conversation than most of you want to have today. But the nexus of that Supreme Court decision was basically two brothers owned a business. They had a buy-sell funded with life insurance. They didn't follow their own buy-sell agreement. As a result, when one of the brothers died, it increased the value of their business by the amount of the insurance and cost the surviving family about $1 million in estate taxes. Long story short is if you have business owners who have a corporate owned buy sell, they need to have their document, their buy sell reviewed to make sure that it's not subject to the same provisions that are impacted by that Supreme Court ruling. So again, do you have a buy sell agreement? When was the last time you reviewed it? Has it been reviewed by a third party? Is it corporate owned insurance? The last thing I would say and to help open the doors to where the planning opportunity can exist is, has your business value or has anything happened in the past 3 or 4 years that may have changed the value of your business? And is your buy-sell agreement updated to reflect that? All I'm getting to here is that most business owners, if they've got an agreement, they signed it and shoved it in a desk drawer 4 or 5 years ago, or 10 years ago, or 20 years ago, whatever it may be, and odds are it's out of date and could present some problems should something happen to one of those business owners. I want to give a couple of quick examples as to what that would really look like. So a good example is our team of attorneys, which I'll touch on here in a moment. We do these document reviews, and one of the buy-sell agreements that we reviewed was drafted in 1986 and had not been updated since 1986. So we're talking, 40 years old this year. The valuation in that business, that buy-sell agreement, was a stated value of $1 million. Back in 1986, that was a lot of money. The valuation of the business today was over $50 million. If one of the partners had died based on their buy-sell agreement, all that would have been owed to their family in redemption of shares was 50% of that $1 million in the buy-sell. So something as simple as they had not updated the value of their buy-sell. We see things like owners who have left the business, who have previously passed, who are now disabled, who are still party to the agreement. That's a challenge. We see things where maybe there's no provisions around what happens if an owner becomes disabled. Or if you live in a community property estate, what happens when your business partner gets divorced and the business now becomes a part of the divorce proceeding? Those are all considerations that business owners should be thinking about when putting a buy-sell agreement in place. Where we obviously think about this is what happens if when an owner dies or becomes disabled? Are there financial products out there that can help remedy that obligation? Life insurance, disability buyout insurance are two solutions that you can bring to the table to help them fund these agreements as well. And we've got a couple of tools that we can certainly showcase and help with these discussions. So one of the big challenges, as I mentioned, was that valuation. So one of the things that Principal offers, we offer a complimentary informal business valuation where we will get 3 years of the business tax returns or financials. And then we have a team of CPAs and tax attorneys that will actually put together a valuation that helps them peg the value for that buy-sell planning purpose. So rather than go out there and pay someone, 20, 30 grand to do a certified appraisal, when all we're trying to do is, help determine how much life or disability insurance in their buy-sell, we have a complimentary service that we will provide that will help them determine that valuation for business planning purposes. In addition to that, if they do not have a buy-sell, which is fairly common, we will talk through a business continuation proposal, which basically talks about how to incorporate that valuation into some sort of suggested type of buy-sell agreement. And then we obviously have sample agreements that we can share that they can then work with their own attorney to implement that buy sell to have that in person. And then lastly, if they do have a buy sell agreement, our attorneys will do that complimentary review where they're going to look through it and not with the mindset of, hey, the attorney was, really not smart for drafting it this way. They're going to go in and say, hey, here's the best practices that we see. Here's how your agreement tracks relative to those best practices. Here's some recommendations that we would say take back to your attorney to maybe shore up your agreement to strengthen that agreement. And that can be everything from including the right trigger language to making sure that buyouts at death are mandatory to spousal consent in those community property states. And honestly, we all also see things like, hey, you didn't sign your document. Like you actually sent us a draft document that wasn't executed. You probably need to go back to your attorney and get this thing signed. So it's all those things that really provide significant value at no cost to your customers and helps them down that path of we need to take the next steps to actually implement some of these buy sell strategies. So I want to pause real quick and see what questions around the buy sell planning, the valuation, or the buy sell review.
If you have questions, please pop them in the chat. But I'll give you my take real quick. If you heard what I heard, this is an excellent sales tool as well to get into the door. With a business owner, right? When was the last time they've had a valuation? A lot of the times you'll find either never or long ago, like Paul was saying. But now you can step and say, well, as part of my services and what I do for business owners, is we could take a look at that and we'll put together an informal business valuation because obviously that leads back to the buy sell agreement. But how do you even know how much your business is worth, right? When have you taken the time to put everything together to figure out your book value? Or even potentially if you're thinking about exiting the business and your succession planning, how do you know what your exit strategy is? And so these tools are available, and to the client, it doesn't cost them anything. So excellent way to use that as a prospecting tool.
Yeah, and I mentioned the resources that we provide as well. We obviously don't need anyone here to be an expert in valuations. We don't need you to be an expert in buy sell planning. When we do one of these proposals, once they're completed, so the valuation takes about 5 to 7 business days. The buy sell review takes a couple of weeks because we actually have two attorneys peer review it and add their commentary. Once those are done, we actually set up a call with you and the CPA or attorney who completed those proposals. We talk about it. Here's the key findings. Here's the discussion points. Have a dialogue about where we think there's, the meaningful things that will matter to that business owner. But then we'll take it a step further where my team, as well as the CPA and attorney, will join you in a call with the client as well to help present this. So you don't have to be on an island and not feeling comfortable to talk about a discounted, earnings methodology for valuations. We have the resources to really help present this to your clients and really help them understand the importance of doing this kind of planning with you and your firms.
Right, because topping that off, you got Paul too, right?
Yeah.
I certainly got my areas of expertise, but why not have some attorneys and CPAs who really know what they're doing in this space, and someone like Paul to deliver that message? Again, just puts you right in that spot where you're adding value to them before you've even asked for $1 premium.
Yeah, and like I said, the time is now. I mean, they're working business owners right now. Their fiscal data is in front of them to get this information. It's readily accessible. Working with centers of influence that are maybe CPAs doing returns and presenting this to them, it's a great opportunity to widen the net on business owner approaches in the first quarter. And we have a ton of success in translating these tools to revenue to your practice as well.
Marion's got a good question there too. So is there an intake form, or how do we initiate the service?
Yeah, so it's all digital. We have a very quick online portal that we utilize. The big thing, and I'll send out as a part of a follow-up, I'll send out kind of the flyer. The only thing we really need is the most recent 3 years of business financials, and that's either 3 years of corporate tax returns, or it can be their P&L, balance sheet, and income statements over the past 3 years. And there's a link that we have. It's very easy intake. It's owner information, names, dates of birth, ownership percentages. There's some industry information in there as far as are they in construction, are they in, an architecture firm, and then your information as the advisor. So the intake is very minimal. And then there's a secure upload for all those financial documents that go in there, and those get assigned directly to our CPAs to do the evaluation. So very simple intake form. We can send that link out as a follow-up here as well. It is something I would
Uh,
say with the link, though, as a quick point of clarification, the link is not meant to be sent directly to your clients. It is for you, the advisor, you, the agent, to work on and upload that information, because we're going to ask you, the agent or advisor, some questions on there as well.
and kind of capping it off to all of this, they're thinking about this. Is there a certain revenue or size of business where, one, it just kind of doesn't make sense to do, and in other words, what are we hunting for here as a minimum kind of revenue?
Yeah, I'd say minimum revenue that we will do is about 1 million of gross revenue. I'll be honest with everyone on the call that that's probably not a target market for you as well, just because most of the time it's a great informational tool, but from a revenue generation standpoint, most of those million revenue and below, they're typically not able to implement a lot of the strategies we're going to discuss. Our core markets in that 5 to 7 million range is kind of a sweet spot. We've done valuations on businesses that are worth, 60, 70, $100 million. Once we start exceeding that 100 million evaluation, we probably tell them to go do a certified appraisal. But we have done significant, 8-figure businesses that we do valuations for. And it's important to know these are informal valuations. So if your client is looking to sell their business tomorrow, they're not going to use our valuation. We're not pulling SIC codes and looking at local market comps. We're looking at the financial data of the business. It's really designed for how do we determine buy sell planning. Maybe how do we look at this as a key employee wants to, maybe buy into the business at some point in time and create a plan around that. It's not designed if they're going to go to tax court and need a valuation to, take to tax court.
Got it. Good, good. And here, I think I'm answering this correctly too. Assume if the corporate office is in one location and the employees in another, say another state, um, doesn't it go by where the corporate office is located?
It depends on the different type of plan design that we're using. If we're going back to those key employee plan designs, if it's corporate owned, it's based on where the company is headquartered. If it's participant owned, like that bonus plan, we're going to look at wherever that employee is located for the insurance policy ownership, the state in which we're doing those kind of transactions. So it really depends on what we're doing as a part of the overall planning.
Yeah, and in most cases too, it's very easy to obtain a non-resident license.
Correct.
It could be done online on NIPR, and many states are pretty affordable. You'll catch one who's not the most, but usually the case is worth it. So I'd encourage you to do so. Cool. Thanks, Paul. Moving on.
Yeah, so last thing I'll do here, and really, I mentioned, wanted to try and avoid a product discussion in the call, but I do want to highlight one particular product feature that as we look at a lot of these buy-sell plans, a lot of times we are funding these with term insurance, which, makes sense. They're looking for large amounts of death benefit at minimal cost. One of the big challenges that we run into when working with business owners is that their business value, if we determine the valuation today, it's not going to stay flat forever, right? We're typically seeing those businesses, ideally, that valuation is going up. So how do we allow for insurance policies to kind of keep pace with that growth in the business? Insurance companies aren't big fans of saying your business is worth $1 million today, but projected 10 years out, it's going to be worth 20 million. So let's give you 20 million of life insurance. So what we have to do is, get creative. And one of the things that, us at Principal being the business insurance carrier, we added a rider a couple of years ago to our term insurance portfolio, specifically around buy-sell planning. And it's called our business value increase rider. And think of it like a cost of living rider, but tied to the buy-sell agreement. So basically what this is once the buy-sell agreement insurance goes in place, we have automatic increases that will happen to that life insurance policy to help keep pace with the value as it grows in the business. So a good example is, we would, utilize this where the business is growing. The first 2 years, we give them an automatic 5% increase up to $250,000 of death benefit on that term policy. And it's non-underwritten. So we are not taking any medical underwriting. Doesn't matter if their insurability has changed whatsoever. It is an automatic guaranteed increase for those first 2 years. In year three, what we will do is we'll get 3 years of financials like we do with the business valuation. And if the business has increased up to 35%, we will true that value up to 35%. There is no cost to this rider. As those policy death benefits increase, the premium would increase correspondingly with that new death benefit. And as a result, those increased premiums would also generate new first year compensation for you as the advisor. Once that first 3 year window is done, it resets. Year four, another 5% automatic increase. Year five, another 5% increase. And year six, we get the 3 years of financial and do that automatic increase. So it's a way to continue to have the policy keep pace with the growth of the business while simultaneously creating revenue, recurring revenue for your practice as well. So I want to give you an example. So let's say you've got a client who's 45 years old, where we look at, essentially a $2 million death benefit, and you've got, 45-year-old, a 47-year-old business owner. The net death benefit each is 2 million. That's going to be about, for basic, 10-year term, it's $2,500 in premium, or $2,500 in revenue. So their premium is essentially what the revenue is there on the base product. So this is no increase to the value of the business. Now keep in mind, their business value grows, that death benefit does not. Now, if we implement that business value increase rider, what we're seeing here is that automatic increase every single year utilizing that business value increase rider. So we still have the same level of revenue, but in the first year, but what ultimately happens is as those increases continue on, the premiums go up. And then what we also look at is we're seeing that recurring revenue go on as well. So by the time 10 years is up, we've more than doubled the death benefit in the buy-sell agreement and generated additional revenue to your practice as well. So a nice little added feature when we're talking about buy-sell planning as to why it makes sense to work with Back Nine and specific with Principal on these opportunities, because we've built the solutions and the products to help solidify these kind of plans. So I'm going to pause and see what questions around any of the product stuff I can answer.
I got a good one from the man, the myth, the legend himself, Mr. Paul Kaplan. Are the premium increases age at issue or at current age?
They are at attained age. So whenever they make those increases, they are at attained age. Great question. And it's not extending the duration of the term. It's simply increasing the death benefit in that term duration.
And let's see, Dennis asks, is this available for key person as well?
So the answer is maybe. If that key person is an owner, we can certainly do that. What is fairly common is a good opportunity is oftentimes we're putting key person coverage in addition to buy-sell coverage. If it's corporate owned, we can actually do that in one policy. So as an example, let's say we have $1 million to cover the buy-sell need. We also need $1 million of key person need, and those are both corporate owned. We can do that in one $2 million policy. The increases will be based on the entire $2 million, not just what is based off of the buy-sell portion of it. We do need to be a part of buy-sell funding, but we could certainly ladder in some key person coverage, and you get the increases based on the total line.
That's cool. I learned something new there too. Thanks, Paul. Gotcha.
And
any other questions? These are great questions, by the way, guys. So thank you. Keep them coming.
And the last thing I would add here, so let's say the business sells or whatever happens in year 7, and we decide that, you know what, we no longer need the coverage for buy-sell purposes, but I've got some estate planning needs. We have our product portfolio is convertible. So in year 7, we can convert 3.645 million to a permanent life insurance policy with no medical underwriting as well. So we have the conversion privilege built into these products as well. They're not just going to convert the base 2 million that they issued off of. They get the increased value for conversion as well. So it creates a long-term planning opportunity, not just for buy-sell purposes, but could be for estate planning, personal planning, whatever it may be down the road as well.
Yeah. And my buddy, my pal, Tom asked, can you retain the rider once converted? That's a good question.
Once they convert, it just locks in. The rider is no longer on the permanent product. So it is only on the term solution. So once they convert, it locks in where they're at. And same thing on the term insurance. If they decide, like any cost of living, if they say, hey, you know what, at year 7, we're good with 3.6 million, We're going to say no to the increase. Once they say no, then it locks in where it's at and no future increases will be available.
Awesome stuff. Any other questions? Okay, moving on.
So we covered a lot of different topics today. Certainly, if there's any final questions here, but I would just say a couple of key takeaways from everyone on the call. Thinking about those client profiles, we'll send the presentation out as a follow-up so you can kind of have the language that we had put in there as well. But go out and talk to your business owners right now about these key employee retention strategies, about the buy-sell plan. The timing right now is really good. A part of that discussion around doing their taxes and looking at their fiscal year of 2025, they also are looking at what they paid their key employees. Are they giving out cash bonuses? Are there ways to redirect those to non-qualified planning opportunities? There's plenty of things to discuss with a business owner in the first quarter of a year. These are two things that will separate you from the competition as to what is meaningful to those business owners. If you certainly have any follow-up questions, reach out to Adam, reach out to me. We're happy to discuss. Certainly, if you have opportunities, we are more than happy to jump on calls and discuss those as well.
Yeah, excellent. And I'll tell you one thing too, and Marion, this is going to kind of tie into your question as well. One, business owner life insurance and commercial solutions are not as saturated. You don't have every other agent down the street helping out business owners with life insurance. So just know that is a very approachable market. The commissions are just like any other life insurance policy. It's based off of the target premium or the annual premium if it's term. And so you get paid the same way. But these do tend to be larger policies. Or one thing I'll point out too is if we're doing a buy-sell agreement, let's say there's 3 partners and we're doing a cross-sell buy-sell agreement. That's actually 6 life insurance policies because they'll each own one on each other. Like I said, not to get too far into the weeds there. But just imagine the revenue per business is certainly going to be a whole lot more. And it's really a key to the door of not just the business owners, but their employees too. So start with commercial. With some group disability long-term care coverage options. You know what? I'll answer this for a little bit for Paul's sake too. Principal is excellent with disability. They have a business overhead expense policy that we've definitely taken a look at a few times. Buyout disability, but Paul, I'll let you share a little bit more there.
Yeah, so when it comes to group products, or disability products, it depends on what we're looking for. Principal is very active in the LTD, STD, group life, group term life, voluntary type of benefits that are truly under a non-discriminatory group chassis. We've got dedicated teams across the country that work in that space. From a pure disability standpoint, as Adam mentioned, we have business solution products like our disability buyout, overhead expense, but also just pure income protection products like a standard, IDI contract. We are very much a core player in that marketplace, particularly in the white collar professional space. So whether it's life insurance, disability insurance, or if we have a true group cover all of our employees, we have other teams that would help support that effort. But we are very much looking at the business owner planning as a holistic type of approach and have built our portfolio around that. Not to mention, I'd be remiss if I didn't say, Principal is known as a 401k company. My wife's been a principal for 21 years. I've been here 20. She's on the 401k side. So we very much are a 401k company as well.
Perfect. Well, gotcha. Any other questions? Hey, speak now or forever hold your peace. Minimum number of employees needed. For group, it's usually 10, right, Paul?
So it depends on what we're doing. And I would just say, from a planning perspective, if we're looking at executive benefit plans, we do this on single employees all the time. It doesn't matter how many employees are in the organization. If we're looking at some level of multi-life underwriting, like guaranteed issue or simplified issue, then yes, 10 lives for these kind of plans. When it comes to true group benefits, LTD, STD, voluntary, that's a whole different world. I don't know all the details over there. But when we talk about more of these executive benefit plans, there's no minimum number of employees in an organization that we would need to see. It really just comes down to what makes sense for that business, particular business owner.
Right. Okay. Well, excellent. For your knowledge to everyone, if you are on this recording, you will get a copy of the recording as well as a copy of the slides here. I did drop my email there into the chat, so if you have any questions, please do not hesitate to reach out. Um, and and yeah, unless Paul, do you have any other closing thoughts?
No, I would just say thank you, Adam, for the opportunity to share a few ideas on middle of the day on a Wednesday. Hopefully, again, everyone here took a couple of key takeaways around approaching those centers of influence and business owners. As you have the opportunities, reach out to Adam, reach out to me. We're happy to help.
Yeah, absolutely. And I guess if my final thought is anything is try it. A journey of 1,000 miles starts with one step. And you're not going to be an expert overnight. That's where you really can leverage myself and Paul and our team here. But just open the door, give it a shot. Now we have tools like AI and Chat GPT. And so go ahead and prompt yourself and see what's going on with the Connolly case and how that applies. And I happen to know a lot of doctors, and doctors are great at medicine, but they're terrible at business. And that holds true for a lot of industries, not just doctors, your plumbers, your electricians, and even your truck drivers. So, know that we can deliver a ton of value there and really help those folks out. But all right, well, if that is all, I'll give you the bulk of your 5 minutes back here. And really do appreciate your time and showing up. And Paul, thank you so much for your help and your support. Principal is definitely one of our core carriers, and we really appreciate you being here.
All right. Thanks, Adam. Appreciate it.
You're very welcome. Thank you, everyone. Have a nice day.